Briefing. I am Frank James, Group Chief Executive Officer, and with me is Andrew Mesado, Group Chief Financial Officer. We welcome all participants who have joined us for this webinar. This briefing has been scheduled to run for approximately 60 minutes. We will use 40 of those 60 minutes for our presentations and the remaining time to accommodate your questions. So during this question and answer session, you are welcome to share your questions by emailing us at gkinvestor@gkco.com. That's gkinvestor@gkco.com. So gkinvestor, one word, @gkco.com. You may also call or send a text to our communications team at 876-809-1121. That's 876-809-1121 or 876-537-1950. So we welcome your questions, and we ask you to either email them to gkinvestor@gkco.com or text them to 876-809-1121 or 876-537-1950. Thank you, and again, welcome to our investor briefing. Really appreciate everybody joining us today. I'm going to start off with a presentation on the performance for the first 9 months of 2025 and some highlights of our strategy. And then I'll be handing over to Andrew to give you some more details of the segment performance and our financial performance. So while our presentation today is really on our first 9 months and Hurricane Melissa was in the fourth quarter, I think it's very important to share with you, the investing public, how GraceKennedy has responded to Hurricane Melissa. First of all, our number one priority, of course, was our team members, our employees. With over 600 team members in these areas that were most affected by the hurricane, it was an area that we had to get on top of very quickly. And I'm very pleased to say that we have been able to account for all our team members, which was not very easy at first because of the communication systems being down on the western side of the island. We sent out our security team members and other team members to find all our team members, and I'm very happy to say that all team members have been accounted for within the GraceKennedy Group. Having located and accounted for our team members, of course, we had to provide support, and we have been providing that through care packages, which have been issued to our team members to support them and their families in the West. But beyond that, we have also looked at their housing needs because a number of our team members would have been displaced, and we have been able to arrange temporary accommodation for those who require it. And we have rolled out our employee assistance program, which sees us giving grants and special loan facilities and other financial support to our team members in what is a very, very difficult time. So we're also very mindful of our team members, the impact that this has had on persons personally. And so we have also been supplying counseling services to team members to take them through what is a very challenging time for Jamaica overall. As Group CEO, having gone around the island personally to meet with team members, I must tell you how absolutely moved I have been by the dedication, resilience, and commitment of our team members who have come back out very early in the day, even in the midst of their own challenges and in the midst of their own crises, to come and say we need to get business going because we need to support the community. Many who I've spoken to said we need to reopen, we need to support the community, which leads me into our business continuity plan. We arranged, as usual, before a disaster, our disaster planning committee got our business continuity plans into action, and those BCPs stood up well to the test. I'm very pleased to say that our main distribution center actually opened and resumed operations the very day after the hurricane. We had a number of our high-low stores in Kingston and Portmore that also resumed operations the day after the hurricane. We now have all our high-low stores open except for one, and I'll talk a little bit more about that. But very early in the day, we actually got high-low in Negril and one of our high-low stores in Montego Bay open to be able to serve those communities. That was by the following Tuesday after the hurricane, because it was very important to us that our customers and the communities we serve would be able to access food and other important supplies. So we got those stores open within a week of the hurricane in the middle of Negril and Montego Bay. Cash availability was also a very important area of focus, and so we had our Western Union operations, GK Money Services operations, being opened, and again, we were able the same week of the hurricane to have operations in the three worst hit parishes, St. Elizabeth, Westmoreland, and St. James, having agents open in those parishes to serve the communities there and ensure that people could access cash at this time. As we stand today, 83% of our Western Union locations are open island-wide, and just under 60% are open in the West. So we are making sure that we are able to serve those communities effectively. All operations of the GraceKennedy Group have resumed with the exception of two. Our meats plant, which is in Savlamar, Westmoreland, and our high-low Fairview store. And those would be the two operations that were most significantly affected by the hurricane. In fact, on your screen, you will see some pictures of both high-low and our meats plant, as well as our DC in Montego Bay, which, notwithstanding the damage to the office area, is up and running today. So the two operations, our Savlamar meats plant, of course, this is where our Vienna sausages come from, or Frankfurters, etc. And so there will be a gap as it pertains to those products, but we are working assiduously to get that factory up and running in early Q1. So early in the first quarter of 2026, we expect to have our operations at the meat plant reopened. The high-low Fairview store, we're working with our landlords there to determine the fastest time in which we can have that store open as well. Of course, all our operations are properly and adequately insured, so insurance will be taking care of those, and we have assessors in looking at the damage and dealing with those claims. But importantly, while our business continuity plans worked well, we have not become complacent with the type and frequency of events that we're now seeing and the intensity of events. I've already asked our risk teams to look at our business continuity plans and start to do some what-if scenarios around an event like this happening on other sides of the island and what that would mean for operations. So the business continuity plans are being revamped under these new scenarios as we come to grips with the fact that these types of events may be happening more frequently with the type of intensity that we have seen. Our estimated hurricane losses, of course, we are in the insurance business, but those have been well contained within our reinsurance programs. I'm very happy to say that our reinsurance program has worked the way it should. We have A-rated reinsurers. And so while, of course, we will see an impact in the fourth quarter on our insurance businesses as we take in those claims, though the GK General Insurance and Key Insurance will both be profitable for this year. So despite the impact of the hurricane, those two businesses should maintain profitability, and we do not anticipate needing any capital calls on those businesses. So our reinsurance program has done exactly what it was supposed to do. And importantly, we are reaching out to our customers to help to settle claims very quickly, because we want to help our customers get back on their feet. And we think this is most important at this time. This is what we're here as an insurance business to do, to help our customers especially in trying times like these. So those businesses will be there to support, and GK General and Key remain strong, and their reinsurance programs have worked effectively. We are still assessing, of course, the full impact of Hurricane Melissa on our operations and financial performance, but I'll share a few things as we look forward. So first, on the macroeconomic front, clearly we see that there will be some pressures on the macroeconomic front. We expect that there could be pressure on inflation, with the impact that this would have on agricultural produce and food generally. And we also can anticipate pressure on the foreign exchange rate, especially as we look to rebuild and there will be a high demand for products and equipment being brought in overseas, an impact on the tourism sector, so we can expect some of that. But I am very, very heartened by the very proactive approach that the Bank of Jamaica has taken, and I commend the central bank governor on the proactive approach to manage both inflation and the foreign exchange rate as we go into this very uncertain period. As it relates to our specific businesses, you know, Carlton Alexander, former chairman and CEO, says whatever is good for Jamaica, we make it good for GraceKennedy. And what is good for Jamaica now is that we rebuild stronger, smarter, and better. And so we are going to make that good for GraceKennedy as well, and we want to be a part of that rebuilding effort. So across our businesses, we are looking to see how we can support our customers who have been displaced as they get back on their feet. And as we rebuild as a nation, there will be opportunities as well to create products and structures that can support that rebuilding effort. We have already seen the impact on remittances as the diaspora wants to help and comes to help, and we have seen that impact driving up remittances as a result of this. We know that there can be an impact on demand, which is something that we'll have to watch very closely. We also have to monitor the impact on customers who have been displaced and how quickly they can get back up and running. At our bank, we are working with our customers and working with the central bank to understand how best to deal with persons who have been displaced. And again, we encourage our banking customers to contact the bank to make arrangements if you have been impacted by the hurricane. So there are a number of implications across the group, but we believe as we rebuild Jamaica stronger and better, there will be opportunities for us as a group to contribute to that effort while also growing value for our stakeholders. Importantly, GraceKennedy is very involved with the national recovery effort. As I said, what is good for Jamaica is good for GraceKennedy, and so we are actively supporting the national recovery effort. We have launched a relief program valued at over $200 million to support national recovery. This involves both what we're doing for our team members as well as what we're doing for the wider society. And importantly, it is being supported by our partners. And I want to really acknowledge and thank a number of our partners: Frito-Lay, Western Union, Fonterra, the Turfloth Group, MF Foods, P&G, and a number of others who have really stepped up and partnered with us to support Jamaica as we go through this long recovery period. We have structured our support for the national recovery under 4 key pillars: food, cash availability, health and wellness, and education. So on the score of food, you'll see us there donating significant food products to the relief efforts through the Ministry of Labor and Social Security and through the ODPEM, Prime Minister's Office, and working with the Jamaica Defense Force to get those food products out to people. We have also been offering special pricing to those entities that are working around the clock to provide food, such as World Food Program, World Central Kitchen, etc., as part of our contribution. Cash availability, I mentioned that earlier, very important, especially as we move past this urgent relief phase into recovery. People need cash so they can determine how best they need to support their needs, whether it's to buy medicine, whether it's to buy equipment and zinc and so on to fix back their homes. we are making sure that people can have access to cash. And so for the period immediately following the hurricane, Western Union and ourselves agreed to waive fees for certain channels for persons to be able to receive their funds, and that was very well received. And also for family members on the eastern side of the island, sending funds to their relatives, all those fees were also waived to allow people to help their relatives in the worst affected areas. I'm very pleased to advise as well that we have now set up with Western Union the ability to send to our GraceKennedy Foundation from the diaspora without any fees. So fees will also be waived. Once you're sending to the foundation for the Hurricane Melissa relief, then there are no fees being charged on that as well. First Global Bank has waived a number of fees as well and put in place a number of unsecured loan facilities, especially to help small businesses, which is the engine of growth, to get back up and running. So we continue to play our part in ensuring that we can build back. Health and wellness is another pillar. Very early in the day, we got the call from the hospitals in the West, Cornwall Regional, Falmouth Hospital, that they did not have water, and so we were able to donate significant amount of water to both those hospitals, which then use that as a hub to provide for some of the smaller health facilities. And with our partner P&G, we are also providing personal hygiene care items to a number of affected persons. And then finally, education is an area that we think is very important as we seek to get our children back in school. We have a number of homework centers across the island, and along again with our partners, some in technology, we're going to be using those to see how we can support the education effort to get our children back learning once again. So I want to assure you that your company is actively involved, and we are confident that we will rebuild as a nation stronger together, smarter, bigger, and better. I have seen the devastation for myself, and it is a time for us all to each one help one to pull together. I have been saying to my team that the power of togetherness is a force stronger than any hurricane, and I have seen that power of togetherness, so I'm very confident that Jamaica will build back better, bigger, and stronger. I want to announce, this had been shared with you earlier in the year, but it has now taken effect in the third quarter in August. Stephen Whittingham, who would have assumed the role of CEO of GraceKennedy Financial Group, taking over from Grace Burnett, who served with distinction for 25 years. Stephen has been Deputy CEO prior to this and has been very involved in the digital transformation as well as the growth that we have seen in our insurance business and in the financial group generally. So I'm very excited about Stephen's appointment and know that he will help to take the group and certainly the financial group to newer and greater heights. So how did our revenues perform for the first 9 months of the year? We saw a growth in revenue of $7.5 billion, or just under 6% growth in revenue 2025 over 2024 for those first 9 months. 3 of our 4 business segments showed growth, the exception being our money services business, and I'll talk a little bit more about that. On the food side, the growth on the food side was largely driven by our international food business, which continues to demonstrate robust growth. We also had growth on our domestic business, but that moderated somewhat this year versus prior years, as we have seen a dampening in demand and consumer spending. But in our international markets, we continue to see strong growth, and that has been driven by all our operations in the US and the UK, and in particular in the US, we have seen our Grace and Lafayette brands both growing very, very well. Our banking and investment segment also showed growth, and here I must highlight First Global Bank, which has shown strong double-digit growth in both revenues and profits. The bank continues to grow its loan portfolio and really transform its operations to become more efficient. We're focused a lot on efficiency and the use of technology, and we're starting to see that pay off in First Global Bank, which has really had a good first 9 months of the year. Our insurance business has also continued the strong growth that we have been seeing, and we have seen in particular our general insurance business, GK General, with its partner Scotiabank in the Scotia Protect program, doing very well, and we continue to enjoy growth coming out of that. But we have also seen both our motor and property portfolio, which is a key part of Key Insurance, growing very well, and Key continues to do well. We have seen strong new business and improved customer retention for our insurance segment. So we continue to enjoy growth in revenue in our insurance business. Money services, I shared with you earlier in the year that this business continues to go through a transformation globally, where prices are coming down for sending money. And this is not a bad thing, because it means that more people will be able to send money across the islands, across the world, to their loved ones. So this is a good move, but it requires that we transition our business as those prices come down, and we're well positioned to do that, and I'll share a little bit more about how we're doing that in this presentation. So on the profit side, while we saw revenue growing, we did see a decline in our profit attributable to stockholders of 0.5 billion, or 7.7%. You'll see that 2 out of 4 of our segments showed growth in profits, and 2 showed declines. Food trading, a marginal decline there. Again, this is really on our domestic side. Our international food side showed strong double-digit growth in our profits, but on our food side, domestic food side, we saw a decline. And this is really largely driven by some expenditures relating to warehousing and logistics, which we have gotten under control. And let me just give you a little context there. Coming into the new year, we made some deliberate decisions around increasing our inventory levels, as we saw the level of delays that were happening in global supply chains and the uncertainty in the supply chain. And while that came at a cost in terms of demurrage and detention and outside storage, it made sure that we had our products on the shelf to be able to serve the consuming public. And that was very important to us, and we did maintain our products on shelf. As at the middle of the year, we have gotten the demurrage and detention under control. They are back to normalized levels. We still have a level of outside storage, and this really has proven itself to be a good thing. Going into the hurricane season, we always build up inventory, and we did that again this year. And as we have seen, it has benefited us, because we have been able to come out very strongly and show that we are able to continue to feed the nation at a time like this in the midst of Hurricane Melissa. As we normalize those inventory levels, which we are seeing those inventory levels normalize as we go towards the end of the year, we expect a significant improvement going into 2026. As I said, demurrage and detention already under control. By the end of the year, early in 2026, we will be able to come out of some of that outside storage and regulate the performance. And so that growth that you're seeing in revenue in the domestic business can translate to growth in profits as well. Money services, this is where we have really seen the big impact, and Andrew will share more when he looks at the segment results. But as this business changes globally, it requires that we change, and a big part of that change is going to come in the way we deliver digital services. Now, upfront, there's an investment to drive digital, and so we are investing behind digital, and it requires scale to really see the benefit of that. We have seen, however, the growth in our digital business. In fact, our digital business would have accounted for 8% of revenue last year. This year it accounts for 12%. That's a 50% increase in terms of the share of revenue that it accounts for. So our digital business continues to grow very strong. And we also are transforming the way we deal with our retail business. So one of the new innovations, for example, those of you who shop at Hilo Barbican, you will now be able to go to Hilo Barbican and do your grocery shopping, and when you're checking out at the designated cashier, you can also pick up your remittance. So you pick up your remittance while you're doing your grocery shopping, always focusing on convenience for the customer. So these are some of the ways in which we are changing the operations of that business to make them more efficient and to take cost out of those operations. Importantly, the business continues to grow its transactions. So we continue to see growth in that business, and even more so now, we are seeing growth in remittances. but it requires that we change the cost structure, and we're well on our way to do that by adjusting the business model towards a digital model. I want to share with you some of the business highlights for the year to date. Earlier in the year, when we would have met at our last investor briefing, I would have shared with you about the takeover bid for Key Insurance. That has now been concluded, and we have increased our shareholding from 73% to just under 99% of Key's shares. Our intention, as I indicated at that time, is to delist Key Insurance. We have already submitted the application for that, and so that could happen even before the end of this year, that we delist Key Insurance. We also, I spoke to you earlier about Scotia Protect and the kind of growth that we have seen in our Jamaican general insurance business as a result of this partnership. I'm very, very pleased to announce that we are going to be expanding that partnership with Scotiabank into 3 new islands, 3 new territories: Bahamas, Barbados, and Turks and Caicos. And that will happen in early 2026, pending regulatory approval. But this is a big move, and we're very happy that we'll be moving from 1 country to 4 countries by the beginning of 2026 with this partnership that continues to grow for us. So very excited about expanding that partnership into those territories. Our international food business, as I mentioned, continues to see strong growth, and a big part of that is really driving our penetration into a number of the key chains in the US, such as Kroger's. In Canada, in particular, Quebec, we have gone into Quebec, and we have opened up new points of sale in those markets, and we are seeing that expansion driving the growth, as well as putting in new products into existing chains that we have in those markets. The UK, US, and Canada all showing growth in our chains. Proud to say that GK General was named Best of Chamber in the large category, and we also won the ESG Award, the Chamber of Commerce ESG Award, for the 2nd consecutive year. We also launched our Dunn's River Lemon Jerk Seasoning, and I need to just hold it up here, and I hope the cameras can get it, because you are looking at an award-winning seasoning, winning the Great Taste 2025 award, which is a really leading accolade in foods. So we're very proud of this product, and some of you will remember that at the beginning of this year, we announced our Grace Honey Jerk Seasoning. Andrew, I think this is it here. That also was award-winning from the same Great Taste Award. So we now have our 2nd award in the jerk category and 3rd award overall. So really very pleased that we are able to demonstrate the authenticity of our Jamaican cuisine in the UK market, and very proud of the team there. We also had our CarryChris rating for GraceKennedy affirmed, and an upgrade of our overall management risk rating from strong to highest, which really is an endorsement of the group's leadership and governance, and so we appreciate that recognition from CarryChris. I mentioned to you last year that we had our inaugural Grace Food Festival, and I told you it wasn't a one-time event, so I'm very happy to say that we had our 2nd Grace Food Festival this year, and it grew even larger. I mean, we were very pleased with the size of it last year. We had around 4,000 patrons this year. This year, we have moved that to over 5,000 patrons and continue to get great feedback. And we really thank our customers and consumers for coming out. This is our way of giving back. I'd also shared earlier this year that we were going to be expanding our water business in terms of exports to new markets. And we have started exporting to Cayman. I think I would have mentioned Cayman earlier in the year and told you more markets were coming. Well, since then, we have added Barbados, and we had already been exporting to Antigua. So we have Cayman, Barbados, and Antigua in addition to Jamaica. And we expect, my team tells me that I can't share what the 2 territories are, so I won't say it now, but 2 additional territories before the end of the year. So that means we would have, by the end of this year, we'll be selling our water products into 6 countries in the region, including Jamaica. And so very pleased that we've been able to deliver on that, which we shared with you earlier this year. Another promise we made earlier this year is that we would be entering new markets with our GK1 app. And we indicated those markets, Guyana, Trinidad, and Cayman. We have already launched in Guyana, and importantly, we have launched with a partnership with Mobile Money Guyana, which is the largest wallet provider in Guyana. So we're very excited about that relationship, and we expect that that is going to pay off big time for us as we continue our regional expansion. Trinidad and Cayman remain on track to be launched in this year, so we are very close to launching in both those markets this year. We had also said that we'd be launching new features in our GK1 app, and in fact we have done just that. We launched our GK1 Send feature, which means that you can now use your GK1 app here in Jamaica, and with your debit or credit card, send funds to your loved ones overseas. I'm sure many of us know how challenging it can be sometimes to do wires, etc. Now, in seconds on your GK1 app, you can send funds to your loved ones overseas, a child in university, or a grandparent or a parent, whoever it may be. You can do that with the GK1 Send feature. We also have the new Direct to Wallet feature, which means your loved ones overseas can send to you. No longer have to wait until the next day or a few days to receive the remittance. It's instantaneous, immediate. So whether it's on the weekend, whether it's in the middle of the night, whether you're on the beach, you can get your immediate remittance as persons send it directly to your GK1 wallet. One other feature that we also included, which is quite a creative one, is our crowdfunding platform. On the GK1 app now, you can now do crowdfunding, which means that for whatever worthy cause you choose, we can accept donations through the GK1 app. And we have actually launched an interesting partnership with ISA on this. For any school that participates in the ISA Boys and Girls Championships, which you know is our premier event that we sponsor, our largest sponsorship, any such school can launch a campaign on the GK1 app crowdfunding platform to rebuild their schools. We know that a lot of schools have been devastated by Hurricane Melissa, so we're encouraging schools and all of the old boys and old girls to get involved with this crowdfunding initiative to rebuild your schools. As we drive innovation on our financial side with our GK1 app, we're also driving innovation on our food side and launching new products. Many of you would have remembered our launch of Zesty earlier in the year, and you'll see our various Zesty flavors right here. And we have gotten really good feedback, whether it's from consumers like me who remember Zesty from before and have that nostalgic feel, but in fact, many of our younger customers who had never heard of Zesty have really taken to the product, and so we continue to be very excited about Zesty and the potential for growth. Our latest addition is actually our green seasoning, and again, we're going to highlight here, this is newly on the shelves in your favorite supermarkets, your Grace green seasoning. I went to our Hounslow factory yesterday and met with some of the farmers there, and we're very excited about this new product. Our green seasoning is going to do extremely well. All made from products produced right here in Jamaica by our farmers in Jamaica, and then bottled right here in Jamaica at our Denby plant in Clarendon. So the innovation continues. You'll see on your screen Grace Basmati rice. You'll see that we have now introduced TR in the can, sparkling TR. So your favorite tropical rhythms is now in a sparkling format in a can. And we continue to find ways to innovate and meet our consumers' needs. I had also shared with you our focus on AI. And our AI focus started with a big focus on governance and putting in that framework. And as we have gotten that framework working, we then moved to really getting our staff comfortable with the concept of AI and understanding what AI can mean for them and for the organization. We are now moving into the stage where we are actually rolling out use cases for AI in the respective businesses. And while there are a number of ways in which AI can be used, there are a few areas that we are really focused on as a group. One is productivity. How can AI enhance productivity and the productivity of our staff and employees? Another is things like fraud detection and reduction in losses. And then the other area is really about those kind of mundane tasks, importantly, so that we can then have our team spend their time on the value-added areas that we think will really drive the growth of the business, while AI takes care of those routine, mundane areas. So productivity, fraud detection, reduction in losses, and taking care of those mundane tasks, as well as where we see applications, of course, for our customer-facing interaction. So AI remains a focus, and we're putting the resources behind it to make that a reality. I shared with you that we had set a target this year of $600,000 in savings from our energy initiative. I'm happy to say that year to date we have already exceeded that, and we're actually at over $700,000. We are on our way to our target of $1 million in savings. We still have our Nalcan factory and our distribution center. I will say that Melissa did set us back somewhat because our plant, Sablamar plant, that had a major solar installation, had that solar installation significantly also damaged by the hurricane. But again, we are properly and adequately insured, and we'll be looking to put that back in place in due course. All of these business highlights and all of the growth that we are doing is with a purpose. And so we continue to live that purpose, especially through the tireless work of our foundations. And I really want to congratulate our foundations team led by Caroline and Sandrina, doing a great job. We were able to prevent over 5 million kilograms of waste from entering the Kingston Harbor since the launch of this project in 2022, 5 million kilograms. And that's a big, big deal. Another area is our food bank, supporting over 2,500 students suffering from hunger and making sure that they can have a nutritious meal. And we have actually leveraged the food bank to really support our Melissa efforts this year. We continue to award scholarships and bursaries to a number of students and grants, both through our GraceKennedy Foundation and our Grace and Staff Foundation, And we continue to serve students through our homework centers and provide counseling sessions. So this work of the foundation is very important. It is a part of who we are as GraceKennedy. It is a part of our We Care ethos, and one that we continue to build on. As we look at 2026 and beyond, we will see that our business remains resilient. We have seen the strong revenue performance, and while we have seen this year a dip in profitability, we're very clear where those issues are and have a clear plan around how we're going to be turning those around. I'm happy to say that our organic growth trajectory remains on track. And when I say organic growth, it's really about our existing businesses versus our acquisitions. So while our organic business remains on track in terms of the objectives that we have set, we are seeing that the kind of exponential inorganic growth that would have come from a major international acquisition has not yet materialized. And so that's really a matter of timing. In terms of the objectives that we have set, we really would have wanted to achieve that in 2023 or latest 2024. But of course, we're not going to do an acquisition just for the sake of doing an acquisition. We need to make sure that it's the right strategic fit, the right cultural fit. And so while we have been very active on the M&A scene, we have seen that that timeline has been pushed back. And of course, that's important for our overall objectives. Excuse me. So we have taken the opportunity as a new leadership team to really review our strategic priorities, to understand the new global world that we're living in, and to identify the opportunities that we see in this world as we look out to the future. So we continue to be very confident about the future, and we see the future as very bright. As I come to a close, I want to stop and pause to remember someone very special to me and very special to the Grace Kennedy Group, and someone whose life has impacted Jamaica, the region, and even beyond the region. Our former group CEO, Don Webby, you will know, passed during the period under review, the third quarter, and it has been a challenging time for us as a group, but we continue to build on what is a tremendous legacy left by Don. So while we have been saddened by his passing, we know that he would want us to continue to build on the legacy that he has developed, and we want to recognize him at this time and ask that you remember him and his family as we deal with his passing. One of the areas that Don was a great champion of was our core values. And in that same way, I am very committed to the core values of Grace Kennedy. We have spoken about a lot that is changing in the world. The global environment is very dynamic. But what will not change at Grace Kennedy is our commitment to our core values: honesty, integrity, trust, commitment, humility, and respect. These core values are not just words. They guide all our decisions. They guide how we treat each other. They guide our interactions with all our stakeholders. And you have my commitment and our commitment to continue to live by the core values of Grace Kennedy. So I want to thank our board, our team members, customers, business, all our stakeholders for their continued support. We remain excited about the future. We recognize that it is a dynamic environment, it is changing, and we are adapting our business to meet those new challenges and find opportunities in the midst of those challenges. At this time, I'm going to hand over to our group CFO, Mr. Andrew Mesado, to take us through some of the details of our financial results.
Okay, thanks, Frank, and good afternoon to those who are participating in this investor briefing. I am going to give some highlights on our third quarter results for 2025. And the first area I want to touch on is the performance for that period. So you'll see that our revenue is now up by 5.9%, or $7.5 billion to $133.9 billion for the 9-month period. The most significant portion of that growth would have come from our food business. So of the $7.5 billion, $5.7 billion was from our food businesses. But we also saw good growth in both our insurance and banking businesses as well in terms of revenue. In the area of profits, or profit before tax, stood at $8.9 billion. That's a 7.5% decline, or $726 million reduction in our profits before tax. And a big part of that has to do with our operating expenses. Some of our operating expenses were higher than the growth in revenue. Frank had mentioned a couple earlier in this briefing. So the first one on the food side was our warehousing and logistics costs. As was mentioned, we did take steps to try and secure inventory to have availability, but at the same time there was a cost associated with taking those steps. And so we're striking the right balance, and in so doing, we've brought those costs substantially in line, and we continue to work down those costs going forward. Also, we would have had increases in technology costs. So you heard that we're focused very heavily on technology, both our digital transformation strategy, as well as artificial intelligence and other technological improvements. And so there is quite an investment related to that, both in capital as well as operating costs, and then you would have the associated amortization of those capital costs in our income statement. So that was another area that we saw increase in costs for. And then we would also have had some additional allowances for credit losses in some of our financial businesses. Then what I'd say though on the positive side is our associated companies and joint venture operations have all done very well. That line on our income statement actually went up by 29%. So quite a few of those businesses did very well across the segments. Our profit attributable to shareholders, that's the net profit after tax attributable to shareholders, we did see a decline there of 7.7%, or 500 million. It's now at $6.1 billion, and a reflection of the results coming from our operating performance. Then for assets, we saw assets growing quite significantly by $24 billion, up 10% over September last year. Some of the big areas of growth in our assets would have included our investment securities. That was up $10 billion. And then our working capital items such as inventory and receivables would also gone up, mainly as a result of the growth in the business. The other side too is our loan book of business. Our customer loans have gone up by $7 billion, and that is reflected primarily in our banking segment. So we've seen growth in our lending book. And then our equity, which is attributable to you, has grown by 8.7%. That's primarily driven by our retained earnings. So the value in the company continues to grow, and coming out of that, we are able to look at the ability to pay dividends. So earlier this month, on the 13th of November, we actually declared a fourth interim payment for 2025 of 75 cents per stock unit. That translates to $740 million, and that will be paid on the 17th of December. And what you will see here is that for the full year 2025, we have held dividends steady. So despite a dip in our profits for the third quarter, we still have a strong liquidity position, and we also see good prospects going forward. And coming out of that, we have held our dividends steady for full year, and you can look out for that dividend next month. I will also now want to go a little bit deeper into the business segments for our group. As Frank had mentioned earlier, 3 of our 4 business segments recorded growth in revenue, and you'll see that the graph here is showing. Okay, this does not want to work. That's fine. So you'll see on the screen the performance for each of the business segments. Our food segment up 5.7%, and showing revenue for the 9-month period of $105 billion. First time we're showing revenue for one segment at over $100 billion for the 9-month period. Both our domestic and our international food businesses grew. Our international food businesses actually grew faster though. And what we saw is in our US operations, the Lafay brand and our Grace brands both grew very well. In the UK, it was our Grace brand and our Duns River brand, and you saw the Duns River brand earlier in the presentation with our award-winning lemon jerk seasoning. So that's a very recognized brand in the UK as well. So those are some of the major brands driving the growth on the international side of the business. On the domestic side, we've seen improvements, growth in our Caribbean Choice brand and our Vienna sausages as well. So overall, revenue growing on the food side. I would jump over to the money service side just to say that part of the challenge we had here is the move to the digital transactions. So what you will see is that on those transactions, you actually have a lower transaction value. And we did see in some of our markets that even though inflows overall were up across markets, we did see transaction volumes in some of our markets had declined. And so that accounts for that 6% decline in revenue. Part of how we're addressing this, as Frank had mentioned, is we're looking at how we can deliver the service, remittance service, in an easier way to customers. And therefore, we have moved into the digital transformation. And through our GK1 app, you can transfer funds both on the inbound side. You can receive funds on your GK1 app in Jamaica, and you can also send funds now from the GK1 app across to other markets. And we have now rolled that out in Ghana, and the plan is in fairly short order to also roll it out in the Cayman Islands and in Trinidad. So there is a move for us to continue to make sure that we can deliver to our customers, deliver value, and also deliver convenience in the way we transmit funds. They're able to transmit funds. On the banking and investment side, we saw revenue grow, in particular for First Global Bank. As I mentioned earlier, the loan portfolio has grown, and so we got interest income from that additional growth. And we also had improved fee income on that side as well. And then on the insurance side, you'll see that's growing double digits by 14.3%, up to now they're 14.3 billion, so the second largest segment in terms of revenue contribution. And the insurance business continues to do very well. In particular, our general insurance businesses have done well this year. We've seen significant growth, double-digit growth in both our property and our motor portfolios. And also, our insurance brokerage business is doing well. I'm going to move to our profit by business segment. And you'll see, let me start off with money services first, just to follow on in terms of how we've been managing with those reduced profits. The main issue here, I'd say, is the time it takes to see the digital strategy pay off. So what is happening is we do have fairly significant increases in technology costs. And what we need now is to make sure that, having made those investments in Jamaica, in the Ghana setup, and for the other two countries that are coming on shortly, we now have to get the benefit of those services. So initially, of course, you just have the cost of implementing, and the cost of rolling out. But going forward, there will be revenue coming in to offset these costs. So that's part of the strategy in terms of moving to a digital strategy, being able to retain our customers who want the convenience of just staying at home and sending and or receiving funds that way. They also for money services, we are looking at our retail network and just being more efficient with that retail network, looking at ways to partner with other agents so that they can be more efficient in how they deliver the service on our behalf. And then on our insurance side, what you would see is fairly good growth. Again, this is coming from our growth in the general insurance portfolio, primarily or GK General and Key Insurance. And then on our banking side, you'll see growth as well of 7%, driven mainly on our banking side. This is coming from the growth in our loan portfolio, primarily. What I'd say though is what we have to also watch carefully is that as we grow our business, that we also prudently make allowances for credit losses. So those are items that factor in But once you're growing and growing the business in a very risk-managed way, then you'll see the profits improve as well. And on the food side, as I had mentioned earlier, in terms of some of those warehousing and logistics costs, so even though we saw growth in revenue for the food businesses, you did see a marginal decline of 4.5% in our food business. And this is primarily, again, I would say, on the distribution side of the business in Jamaica. All our international companies actually saw growth in profitability, and our factories also showed growth. But we did have some higher operating costs on the domestic side, which would have moderated the performance there in our food business. And I think those are the main highlights I'd like to give for this afternoon. Thank you.
All right, thank you very much, Andrew. I want to remind us that we can send in our questions to gkinvestor@gkco.com. That's gkinvestor@gkco.com, gkco.com, or to our communications team via text at 876-809-1121 or 876-537-1950. While you do that, I'm very pleased to share with you our new corporate video, which really reflects our business, who we are as GraceKennedy, our ambitions that are guiding our future, the strength of our food and financial services business, and gives you a taste of where we want to take the business in the future. So I'm going to share that with you, and then we will open up for Q&A.
We are GraceKennedy, a company rooted in Jamaica and trusted around the world.
We care about the people we serve, our customers, our communities, and each other.
In every product, every bite, every money transfer, and every transaction, we deliver with heart, with pride, and with purpose.
Powered by over 2,000 dedicated team members across the globe, GraceKennedy is driven by people who are committed to our vision and who embody our core values: honesty, integrity, trust, commitment, humility, and respect.
Our food brings families together, from Jamaica to the diaspora and beyond, with the rich, familiar flavors you've loved for generations.
From farms in rural Jamaica to carefully crafted food products made in our manufacturing facilities across Jamaica and in the UK, then onto supermarket shelves and dinner tables around the world, Grace is there.
We're championing culinary innovation and investing in agricultural resilience, all while delivering consistent quality and taste. Our financial group helps dreams take shape, supporting families and businesses with reliable, seamless, consumer-first solutions.
We protect what matters most, offering you peace of mind through every stage of life. We bring people closer together across borders, making it easy to support loved ones wherever you are. With innovations like our GK1 app, Jamaica's #1 digital wallet for remittances, staying connected has never been easier. We help our clients manage their money, grow their wealth, and build their futures.
With over 50 subsidiaries and operations spanning Jamaica, the wider Caribbean, including Belize and Guyana, and key markets like the USA, Canada, the UK, and Europe, we proudly serve vibrant, diverse communities worldwide.
Through our trusted brands and dynamic businesses, GraceKennedy continues to grow our reach and deepen our impact. From humble beginnings in Kingston, Jamaica in 1922 Our over 100-year legacy is the foundation of a bold, purpose-driven future.
A future led by our amazing team, anchored in award-winning corporate governance and driven by a purpose that goes beyond profit.
We have a deep commitment to giving back. We champion education, youth, community development, nation building, and sustainability.
Because we are deeply invested in the future.
That's why we have invested in a bold and a dynamic environmental, social, and governance strategy rooted in our We Care ethos and focused on good governance, people, environmental stewardship, community upliftment, and responsible products and services.
We are building the next generation of great leaders by creating opportunities, fostering growth, and nurturing a culture of continuous learning and engagement. We lead with respect and humility, inspiring pride in everything we do.
We envision a future where GraceKennedy is the #1 Caribbean brand in the world, delivering more products and services in more places with the same trusted quality.
Across the globe, we proudly share the best of Jamaica with care. Because to us, this is more than a business.
It's about building strong relationships with our thousands of shareholders worldwide. It's about upholding the highest standards of integrity for those we serve.
It's about protecting the planet we all depend on. It's about empowering our people and uplifting the communities we're proud to be part of.
It's people.
It's purpose.
It's
GraceKennedy.
We are food.
We are financial services.
Nous sommes mondiaux.
We are family.
Somos multiculturales.
We are.
We are.
We are.
We are.
We are GraceKennedy. People and purpose. We are GraceKennedy. I think that captures it very well, Andrew, about who we are, and I hope that has given all of you watching today an insight into our future. Happy to have received questions. I want to jump straight into those. So we have my friend Neville from the Gleaner. GK is growing its top line but earning less per dollar of sales. Margin compression stems from higher operating costs, constrained purchasing power, and segment-specific challenges. What is your position on this, and what are the amelioration plans? Thanks very much, Neville. So there are a number of things this year that we have already gotten under control, as we shared with you, and we expect to see those improvements reflected in growth in 2026. And then there are other areas that we require to transform our business model. So as we mentioned, our food business, that's one of the areas that over the last few years you have always seen growing in our profits, and you see the profits even growing faster than the revenue. This year that has dipped because of our deliberate moves around inventory, which has had a cost, but has importantly made us maintain our shelf space and be able to serve our customers. At the middle of this year, with our improvements, because we have been investing a lot behind our supply chain to improve our visibility around how we move product around the world, and training our supply chain team in this very dynamic supply chain space. And with those investments paying off, we have gotten a big part of that under control as at the middle of this year. The other element related primarily to warehousing is also coming down as we bring down those inventory levels and normalize them, having paid off well with what happened in our hurricane season, but we're normalizing those. So that we expect to change in 2026. Andrew would have mentioned certain areas around provisioning, etc. as well. Where we have a fundamental business model change is our money services business. And you would see that that is where the sharpest decline has come from in terms of reduction in profits, even though we are growing our top line. And that requires us pursuing our digital strategy, which requires investment up front, which you're seeing reflected in the P&L. But as we get scale, then we're going to see that that starts to pay off as well. So we're being very deliberate, very focused on the areas where we see change needed and where we need to transform the business model, and then eliminating those areas which are creating a one-off effect this year to make sure we don't have a recurrence in the following year. So thanks for that question, Neville. And Neville has, there are two questions here, Neville, that I think are related, so I'm going to bring them together and ask Andrew Mercado to address them. The apparent disconnect between profit and cash flow raises questions about liquidity management heading into Q4. The sharp fall in operating cash flow is concerning. Inventory buildup and receivables expansion suggests GK is either positioning for future demand or grappling with slower connections. What is your comment? I'll ask Andrew to speak to that for me.
Okay, thanks. Thanks, Neville, for that question. So what I'd say is, in terms of the cash flow, there are different elements to it. So when you look at the cash is either received or consumed through either operating, investing, and our financing activities. So the cash flow from our operating activities is actually up, showing an increase of $5.9 billion. Where it has been utilized primarily is in our investing activities, where we have increased our investment securities by just over $10 billion. So the main move is to utilize cash efficiently, and having the cash idle, instead of having the cash idle, we have put it on the longer dated investment securities in order to earn a good return on that until we have other uses for the cash. So that's kind of the first point. I'd say that where you're seeing that dip in overall cash flow, it's primarily from the investing activities utilizing the cash to place on longer dated investments. But the operating cash flows have actually shown an increase by $5.9 billion. Now, you have pointed out in terms of the operating side, even though it's positive, there are some increases in non-cash items like inventory and receivables. And so on the receivables side, what I'd say is most of these are short-dated. We haven't seen any significant increase in our receivables days, so we haven't seen an issue with collections for receivables and inventory, as Frank had mentioned, in terms of how we have built up inventory, primarily, again, to make sure that we are able to meet the service levels required by our businesses, by our customers. But at the same time, we are managing through our supply chain how to best strike that balance between availability and any excess inventory that may arise. So that's kind of how I'd view those points.
Thanks very much, Andrew. Neville, I'll just add, you mentioned Q4. As we go into Q4, and clearly receivables and working capital is something that we're going to be keeping a very close eye on in this environment. We know that there would be customers who are impacted, and so we are being very deliberate about how we support those and how we manage that. And as Andrew said, a lot of those are fairly short-dated. So that continues to be an area that we watch and monitor very closely and carefully. All right, we have some other questions here. We have, has the group estimated costs attributable to Hurricane Melissa, and will measures be taken to safeguard profitability going forward? Thanks for that question, Fred. Yes, we have. So there are some very direct costs, of course, and those direct costs are related to our insurance business and the retention that the insurance business. Most of the claims, of course, are reinsured. Most of the claims cost is reinsured, but there will be a net effect, and we will see that effect primarily in the fourth quarter. But as I said, I'm very pleased at how our reinsurance program has responded. We are within the reinsurance program, so we have not gone over the reinsurance program, and we do not expect to go over the reinsurance program based on all the models that our international reinsurers have shared with us. And therefore, even though there will be an impact in Q4, we expect our two general insurance businesses to remain profitable for the full year 2025. Then, of course, there's the impact of those businesses that would have had damage. And as I said, we are properly and adequately insured, so those will not be a significant problem. Of course, a small retention would be there as well, but nothing significant. The bigger challenge and the more difficult to estimate, of course, is what's the impact on the business going forward. And so that's something we continue to monitor. We're very aware of all our customers. We have a list of all our customers who have been impacted. We're tracking how they get back up and running, giving the necessary support to get them up and running where we can. We're seeing on some parts of the business, of course, like the remittance side, we're seeing growth in remittances as the diaspora comes to the help of friends and relatives and Jamaica generally. And we're also making sure that we stay very close to our clients and customers and support them through this time of change and challenge for them. So we continue to measure that, but as I said, we remain very positive. And what is good for Jamaica is good for GraceKennedy. And as we start to rebuild as a nation, we at GraceKennedy will be making sure that we play our part by supplying the necessary products and services, both on the financial and food side, to support that rebuild effort that we expect to start in 2026. Okay, Andrew, I think this one is for you. Are plans still on track for GK Foods to list on a major stock exchange by the end of the 2026 financial year? I don't believe that was a target for 2026, but Andrew, you'll address that.
Thanks. We have not set the timeline at 2026. It's part of our 2030 vision to investigate and determine an appropriate time when listing on an international exchange would make sense. And so we've spoken about this a few times in terms of what are some of the key indicators of being ready. So one of them, of course, is that we continue to look at growth to make sure we are of the appropriate size that would be attractive to an international investor, and also that we have sufficient diversification in revenue streams and profitability, that it makes sense. So we continue to look at that, as well as looking at the structure of how that would be presented to the market. But we don't have an immediate time frame as to when we are going to propose that listing.
Thanks, Andrew. All right, still some more questions coming in. What impact is Hurricane Melissa expected to have on your agribusiness? Good question. Clearly, we would have seen where the agricultural sector in Jamaica has been significantly devastated by this. We were in a fortunate position that we have fairly strong inventory levels in a number of our raw materials for things like our jerk seasoning. And I went down, I was in St. Elizabeth actually just yesterday and met with some of the farmers, and I'm really pleased to see the resilience of our farmers who have already started to plant back. I got a nice bunch of scallion that was freshly picked out of the ground at our agro park, where we have, so some of those shorter term crops, the callaloo, that a few weeks ago was just this high, is already growing. So those kind of shorter term crops, we are seeing the efforts to replant, and we are there supporting our farmers to get back on track with that. But there are some areas that will be more significantly affected. One such area is ackee. So again, I walked through the agro park, and fortunately the ackee trees, most of them stood up, but all of it was, we were actually in the season, and so we lost all of what could have been a good reaping period. But we're starting to see the ackee trees spring back, but that will take a little more time. So it's going to be a mixed bag, and yes, there will be some gaps. Fortunately, we're going to try and manage those inventory levels that we do have to try and keep key products like our jerk seasoning on the shelf. And as I said, we're seeing things like callaloo coming back. All right, another one, I think, Andrew, I'll ask you to take this one. It says, why did Grace Foods Canada report lower revenue versus prior year?
Thanks. It's interesting in terms of the dynamics of currency. And what we did see is that on the average rate of exchange for the Canadian versus US and Jamaican dollars was actually showed a depreciation. So that's why when translated, you end up seeing a lower revenue for Canada. But in fact, in their local currency, in Canadian dollars, they did grow by 5%. So overall, they are showing growth, but just because of a currency conversion, you would end up seeing a small decline.
Thank you, Andrew. Quite a few questions coming in, and you'll keep me on track with time, Suzanne, but let's see how many we can get through. This one is, in GK's Q3, there was mention of expanding the Scotia Protect partnership into other markets. Does this expanded partnership mean that Scotiabank customers in other regions would be referred to other GK General Insurance subsidiaries in the Caribbean? Also, is Scotia Protect your largest broker for GK General Insurance? So we do not have GK General Insurance subsidiaries in those new markets that I mentioned, but we do have arrangements in those markets to be able to support that business through our GK General Insurance company here in Jamaica. And so we have made and are in the process of making those necessary arrangements to be able to do that business. But it wouldn't be through a separate subsidiary, it would be through partnerships in those markets as we put in the necessary infrastructure in place. I won't answer the next part of the question around who is our largest broker, but Scotia Protect is certainly a very important partner. We're very pleased with how that business has been growing. I think we answered this one as well already. It's the current estimate of damages for Hurricane Melissa. But there's a second part to it. Do you expect any sharp rises in reinsurance costs going into 2026 from this event? That's something that as an insurance business and as an industry, we're evaluating very carefully. It is still something under discussion, so I wouldn't want to speak definitively, but what I can say is that based on some of the discussions we have, the reinsurance costs that have gone up, if you look over the last few years, those costs have gone up over the last few years. And some of that increase was in the anticipation, when you speak to the reinsurance world and experts, that there would be a major event at some point. So some of that is already captured in the increases that have happened over the last few years. And so I would say that based on discussions at this time, we're not anticipating significant increases, but there could be some level of increase. It is still a discussion that is going on, and we'll have to see how the reinsurance market reacts, but I wouldn't expect it to be a substantial increase, though there could be increases. According to BOJ's latest report, FGB's asset base has surpassed $100 billion. That's an 8% year-on-year increase. Congrats to the team. The loan book is also up 16% to $49 billion. How does FGB expect to maintain growth post-Hurricane Melissa, where capital costs will likely go up, risks are set to be higher, and credit loss provision set to rise? Also, any new innovations or announcements? So we believe as a bank we need to continue to be focused on the strategies that we had before Hurricane Melissa. Clearly, in this type of environment, we're going to be working very closely with our customers, seeing where they have been impacted and helping, and this is something happening as an industry, to speak to forbearance and how that will be managed. But we see opportunities because there's going to be a rebuilding and a restructuring of the Jamaican economy as we rebuild bigger and better, and that will create opportunities for the bank to support that rebuilding effort. And so making sure that we're in a position to do that will be key. Our continued focus on efficiency becomes even more important, so that will continue, as well as our focus on technology. We have been investing quite a lot in technology at the bank, and you'll be seeing some things coming on in terms of innovations. I can mention some of them because we're actually in the pilot phase, like digital onboarding and loan automation, which once fully approved will be able to be fully launched. And we are going to continue to drive that type of convenience for our customers, which I think will be very important. So managing carefully our exposure, but also taking full advantage of the opportunities to support the rebuild effort for Jamaica. Let me check here. Andrew, it says, regarding the upcoming remittance tax of 1%, is there any foreseen impact on the GK Money Services business? How is the company preparing to address these challenges?
Okay, thanks for that one. So, yes, at the start of next year, which January 1, 2026, effectively, there will be a tax on remittances coming out of the United States. And so this is primarily on the kind of cash type transactions and the retail type of businesses. So what we do anticipate is that persons would in part migrate to digital methods of transfer to avoid that tax. But at the same time, we're also sensitizing and communicating with our customers. So through our agents, as well as directly with our migrant workers through our team in the US, we have been communicating with them, giving them some advice, also giving them what are the options that they can utilize in order to manage through this remittance tax. So it's really about how do we communicate with our customers, and also assist our agents to be there for our customers.
Okay, thank you, Andrew. Another question. GK's food service businesses have likely seen a sharp rise in food and consumer demand after Hurricane Melissa. Firstly, is Catherine Peak okay, as some persons are saying that access to one of your sites are blocked? Secondly, how will the disruption from agricultural inputs influence your pricing to Jamaican market in 2026? And do you expect there to be a steady dip in discretionary consumption due to the hit to our winter tourist season and fewer events or future events? So firstly, on Catherine's Peak, yes, there has been a significant breakaway of the road leading up to Newcastle and Catherine's Peak. Fortunately, we have found from a number of years ago, because of this precise risk, ensured that we had a number of other water sources. You will remember that we did an acquisition in 2023, I believe it was, Andrew, of Unibev. A key part of that acquisition was to also acquire the water source that came with that acquisition, and that water source is actually quite a strong water source, and we also have a lease for another water source. So we had diversified and ensured that we would have these water sources available for any event like this, and so we don't expect there to be a disruption of our ability to supply water based on the availability of water sources. Of course, there's a strong demand for water in this time, and so we are making sure that we can do our best to keep up with that demand. But that's more so from a factory point of view, being able to bottle the water to meet the demand, as opposed to a lack of access to the water source. In terms, we spoke about the agricultural inputs, and we are being very, very sensitive to pricing. So we are not moving, we have not moved, first of all, our prices since Hurricane Melissa, and we'll make every effort not to be moving our prices, certainly not in the very near future. You asked about 2026. I mean, 2026 is an entire year, so we'll have to see what happens in 2026. But as it stands right now, we continue to hold our prices and ensure that we can support our customers at this difficult time. Discretionary spending, that's an interesting one. You're going to have a mixed bag. You do have persons that have been displaced, and it will cause some amount of unemployment potentially. But at the same time, you have a lot of funds coming in to support the recovery effort. And in 2026, we anticipate the rebuilding effort to start, and with that is going to also create a level of cash flow in the society. So it's something that needs to be monitored very carefully, but yes, there could be a dampening of discretionary spending in the short to medium term, which over time we would expect to improve. Andrew, I think this one is you. Will GK capitalize on the declining stock prices on the Jamaica Stock Exchange for certain securities as investors seek cash? Also, would CFO Mesado be open to another limited share buyback to provide liquidity to the market while buying back the shares at a decent valuation?
Okay, thank you for that one. In terms of what GK Capital will do, they would facilitate transactions primarily through their stockbroking business. So it's an opportunity for customers and clients to take advantage of prices that are depressed at this point in time. Also, GK Capital does offer mutual funds, and one of those mutual funds is equity linked. It does have equities in the portfolio. So again, their mutual funds have been performing very well on the market. So that's an opportunity for them to market to their customers. In relation to the GraceKennedy, any future buyback, I would say at this point in time, what we're focused on is use of cash in the most efficient way we can at this point in time. One is we have been making sure that we keep our dividends steady, even as our results are somewhat challenged. And the other thing is we would want to preserve cash in order to make future investments. You've heard a lot about today about our investments in technology. We also are looking for mergers and acquisition opportunities as well as other investment opportunities. So at this point, we have decided to focus more on those rather than providing additional liquidity to the market through a share buyback program. So at this point, we're not focused on a share buyback program now.
All right, thanks very much, Andrew. Lots of questions. Really appreciate the level of interest and engagement of the investors. I think we have probably 2 or 3 minutes. I'll see how many we can get through. For CEO James, Hurricane Melissa has totally changed the shape of Jamaica and further gives credence to the GK focus on having most of the revenue and profits outside of Jamaica. How will this natural disaster influence your business strategy around technology, money services, and banking businesses? Also, as this disaster fueled your ambitions to search for great deals overseas from an acquisition standpoint? So first of all, I would say that we continue to believe in Jamaica. Jamaica has continued to prove itself as very strong and very resilient. In fact, you'll notice that we would have shared for 2024 that our revenue outside of Jamaica was about 42%. We would have wanted, our targets had that at 50%, but that growth was not because of the international market not growing, but because of how well Jamaica has grown. So while we can anticipate the impact of Melissa having some short-term effects on the island, we do believe that as we rebuild, we will be able to rebuild stronger. And so we continue to remain very committed to our strategy in Jamaica. As you rightly pointed out, we have for many years had a strategy of growing faster outside, really because of the significant size of those markets, less so because of our Hurricane Melissa. And so we continue to see potential for those markets to grow, and we continue to focus on them. Technology continues to be a big part of our drive, one for efficiency, but also for products like GK1 that brings innovation to the market. And during something like Hurricane Melissa, we saw the tremendous uptick in the use of GK1 for remittances, for example, where persons may not have been able to go, they were still able to send remittances. And our banking business, I spoke to that earlier. So our ambitions continue. As an executive, not so much not driven by the hurricane, we are looking at the future opportunities for the group as we go into the 2026. But we continue, as I said, committed to both Jamaica as well as our growth internationally. What is your assessment of the performance of your Barbados investments? I know Signia Globe continues to do well. Are you planning any additional investments in the Barbados market? You're very right. Signia has been doing really well. It's part of that banking and investments growth that we showed. And as Andrew mentioned, where our joint venture businesses are and associated companies are doing well. So Signia continues to do well, and we continue to support that business. And I went and met with the Signia team earlier this year, and they have some exciting growth plans. As a publicly traded company, I can't share with you yet about any potential investments, but as I did mention, we have gone into Barbados this year with our Catherine's Peak water, and Barbados is one of the territories that we will be entering with our Scotia Protect expansion. Do we have time? How much time do we have? No? Okay, I'm getting the wrap up. Okay, I'm being told that we have actually gone over time. We do have a few more questions. I'll just sneak in one around our money services and what does the decline mean in terms of our market share. I'm pleased to say that as we assess the BOJ information, we are able to see that we continue to grow market share. So our decline in revenue is not as a result of declining market share. We continue to grow our market share, but as I mentioned, the reduction in the price for sending has impacted the revenue. With that, I am now being given the urgent wrap-up signal, so I'm going to close there and thank you all. Ladies and gentlemen, this brings today's briefing to an end. Thank you for your time and for your participation. As of tomorrow, a link to today's broadcast will be available on our corporate website, and that's www.gracekennedy.com, www.gracekennedy.com. If you have any additional questions, please submit them to gkinvestor@gkco.com. We also value your feedback on the streaming experience and any suggestions you may have as to how we can improve this experience for you. So once again, thank you for joining us, and I leave you with this thought. The power of togetherness is a force stronger than any hurricane. So we will, as a nation, rebuild better and stronger together. Thank you.
We are Grace Kennedy, a company rooted in Jamaica and trusted around the world.
We care about the people we serve, our customers, our communities, and each other.
In every product, every bite, every money transfer, and every transaction, we deliver with heart, with pride, and with purpose.
Powered by over 2,000 dedicated team members across the globe, Grace Kennedy is driven by people who are committed to our vision and who embody our core values: honesty, integrity, trust, commitment, humility, and respect.
Our food brings families together, from Jamaica to the diaspora and beyond, with the rich, familiar flavors you've loved for generations.
From farms in rural Jamaica to carefully crafted food products made in our manufacturing facilities across Jamaica and in the UK, then onto supermarket shelves and dinner tables around the world, Grace is there.
We're championing culinary innovation and investing in agricultural resilience, all while delivering consistent quality and taste. Our financial group helps dreams take shape, supporting families and businesses with reliable, seamless, consumer-first solutions.
We protect what matters most, offering you peace of mind through every stage of life. We bring people closer together across borders, making it easy to support loved ones wherever you are. With innovations like our GK1 app, Jamaica's #1 digital wallet for remittances, staying connected has never been easier. We help our clients manage their money, grow their wealth, and build their futures.
With over 50 subsidiaries and operations spanning Jamaica, the wider Caribbean, including Belize and Guyana, and key markets like the USA, Canada, the UK, and Europe, we proudly serve vibrant, diverse communities worldwide.
Through our trusted brands and dynamic businesses, Grace Kennedy continues to grow our reach and deepen our impact. From humble beginnings in Kingston, Jamaica in 1922, our over 100-year legacy is the foundation of a bold, purpose-driven future.
A future led by our amazing team, anchored in award-winning corporate governance and driven by a purpose that goes beyond profit.
We have a deep commitment to giving back. We champion education, youth, community development, nation building, and sustainability.
Because we are deeply invested in the future.
That's why we have invested in a bold and a dynamic environmental, social, and governance strategy rooted in our We Care ethos and focused on good governance, people, environmental stewardship, community upliftment, and responsible products and services.
We are building the next generation of great leaders by creating opportunities, fostering growth, and nurturing a culture of continuous learning and engagement. We lead with respect and humility, inspiring pride in everything we do.
We envision a future where Grace Kennedy is the #1 Caribbean brand in the world, delivering more products and services in more places with the same trusted quality.
Across the globe, we proudly share the best of Jamaica with care. Because to us, this is more than a business.
It's about building strong relationships with our thousands of shareholders worldwide. It's about upholding the highest standards of integrity for those we serve.
It's about protecting the planet we all depend on. It's about empowering our people and uplifting the communities we're proud to be part of.
It's people.
It's purpose. It's Grace Kennedy.
We are food.
We are financial services.
Nous sommes mondiaux.
We are family.
Somos multiculturales.
We are.
We are.
We are.
We are.
We are Grace Kennedy.